Are you concerned that your monthly salary of Rs25 either may not be enough to build wealth through investing? While it may be tempting to think that only those with high incomes can achieve financial success, the truth is that even with a modest salary, long-term wealth building is possible. Let's explore some strategies that can help you on your journey. Firstly, it's important to have a solid understanding of how investing works. Rather than relying on assumptions or hearsay, take the time to educate yourself. Let me illustrate with an example. Imagine you invest just Rs5, 00 every month. It may not seem like much, but over time, this consistent investment can lead to substantial wealth. To ensure that you allocate enough funds towards investing, it's essential to have a budgeting plan. The popular 50-30-20 rule can be helpful in this regard. According to this rule, 20% of your salary should be dedicated to investments. For a monthly income of Rs25, seriously, this would translate to Rs5 or invested each month. While it may seem modest, over the long term, these investments can grow significantly. Now let's discuss the best approach for investing your hard-earned money. Many beginners are tempted to try their hand at picking individual stocks, but this can be quite risky and requires a high level of expertise. Instead, I strongly recommend investing in mutual funds. Mutual funds are managed by professionals and offer a diverse portfolio, making them easier to understand and manage, especially for beginners like yourself. When it comes to mutual funds, there are different types to consider. Nifty 50 mutual funds, for instance, invest in the top 50 companies in India, such as Tata, Reliance, HDFC, SBI, and ICICI. These funds offer stable returns with lower risk compared to other options. On the other hand, mid-cap mutual funds invest in companies with market capitalization between Rs7 crore and Rs 20,000 crore. While these companies offer higher growth potential, they also come with increased volatility and risk. Lastly, small-cap mutual funds invest in smaller companies with a market capitalization below Rs7 crore. These funds have the potential for high returns, but come with higher risk and volatility. It's important to understand the relationship between risk and return when investing in mutual funds. Small-cap funds have the potential to offer the highest returns, averaging around 18% annually. However, they also come with the highest volatility. Mid-cap funds provide moderate returns, averaging around 15%, along with moderate risk. Nifty 50 funds, while offering lower returns, averaging around 12%, provide lower risk and stability. In conclusion, building wealth through investing is not just reserved for those with high incomes. With a monthly salary of Rs25,000, you can still make significant progress towards your long-term financial goals. By educating yourself on investing basics, budgeting wisely, and investing in mutual funds, you can achieve your wealth-building aspirations. Remember, it's not about the amount you invest each month, but the consistency and long-term commitment that truly matter. Are you looking for a balanced investment strategy that offers both stability and growth potential? The speaker recommends allocating 60% of your investments in Nifty 50 mutual funds, 25% in mid-cap mutual funds, and 15% in small-cap mutual funds. This carefully curated combination is designed to provide a balanced approach to investment, allowing you to benefit from the stability of large-cap funds, while also tapping into the growth potential of mid-cap and small-cap funds. It's important to remember that individual risk tolerance and investment goals may vary, and adjustments to this allocation can be made accordingly. The key here is to find a mix that aligns with your long-term financial objectives while still allowing for some level of flexibility. Speaking of long-term, the speaker emphasizes the importance of investing with a long-term perspective. In fact, significant returns are more likely to be realized if investments are held for a long period, such as 10 years or more, rather than seeking quick gains. This aligns with the notion that long-term investments have the potential to weather market volatility and deliver more consistent returns over time. So what kind of returns can you expect from this balanced investment strategy? The average annual return is projected to be around 65%, factoring in the returns from Nifty 50, mid-cap and small-cap funds. It's worth noting that taxes on capital gains will apply according to Indian tax regulations. So it's important to factor this into your overall investment strategy. In conclusion, the speaker reiterates that consistent, long-term investing with a well-diversified portfolio can lead to financial success. It's about staying the course and being patient, even if you're starting with a
modest monthly investment.
By following a balanced approach and keeping long-term perspectives in mind, you can set yourself up for financial stability and growth in the years to come.